So you mean to say if I wanted to change cash for my next trip, it wouldn't really matter which money changer I go to?
Unless you're a really big spender and you're going to spend tens of thousands of dollars, then that might, make a difference.
Okay.
But for a typical short trip, particularly if you're just going up to JB or something like that.
Or anywhere
it's,
within Asia.
Anyway, correct.
Yeah.
And that's not going to be that much, to be
Okay.
honest.
Hi, I'm Andrea Heng and welcome back to CNA's Money Talks podcast. Now, a couple of days ago, I need to tell you what happened. I got an alert telling me that the US dollar had dropped or that the Singdollar had appreciated against the US dollar. So what did I do? Naturally, the first thing I did was to top up and load up my multi-currency app and then converted it to USD. I felt like such a winner that day. Now, I know I'm not the only one doing this. Like many of us, we tend to load our multi-currency apps or maybe even buy foreign currencies when the foreign currency drops against the Sing dollar. You either use it for your travels or as an investment. But what do you need to think about before you go about doing this, before you make that decision to change currency? Let's ask Khoon Goh, his head of Asia Research for ANZ, joining us on the Money Talks podcast right now. Hello, Khoon.
Hi.
Gone are the days, right, where we're carrying foreign currencies and just cold, hard cash, sitting in the airport later on wondering, what am I going to do with all of this leftover cash, foreign currency, on the last day of my holiday? Do you still carry cash on you when you travel?
Well, to be honest with you, I'm a bit old school, so I still do carry cash because, let's be honest, depending on which country you go to, obviously, whether it's developed or, emerging economy, not everywhere accepts cashless options.
Yes, right.
So sometimes it's always handy to have cash up your sleeve just in case.
One of our guests in a previous Money Talks episode told us that when he saw the Japanese yen dropping, he immediately did the same thing I did. He went and changed a large sum of money and then kept it in his multi-currency app. What are the pros and cons of doing this?
Well, it makes sense to look at a very favorable rate, particularly if a trip is coming up and you know you're going to utilize that. So it makes sense to convert at a very favorable rate. But the downside is that potentially that rate could get even better.
Yeah.
And you're missing out. Secondly, in terms of these multi-currency wallets, bear in mind you're not actually earning any interest when you convert into it. Whereas if you still retain your Sing dollars in your savings account, at least you're earning something. Not much, but at least something.
Right.
So there's that opportunity cost of lost interest that has to be borne in mind.
Okay.
It's not going to be a large amount, obviously, but it's really around the potential for the rates getting better. So if you're converting, say, the whole amount that you intend to, then you're missing out on any potential better rates.
Okay.
But on the other hand, it could also, revert. And therefore, in my mind is let's not make any regrets because whatever rate that you're changing is obviously a rate that you're happy with.
Yeah.
And you're going to spend that amount anyway.
That's true. But that's the thing also, right? Like I've always often wondered, when do you know it's a good time to change? Is it when everyone goes, hey, the US dollar has come down, I think better change now? Or is there something that we sort of can refer to, a gauge, or is it just the headlines that we're going to be paying attention to?
Well, there's a lot of things that affect currency movements. But if you're already committed or you've already made the decision to, say, travel or go on a holiday to a certain destination, then, even a 2 to 5% currency move is not going to be material in the grand scheme of things. I mean, it's not going to affect the cost of your airfares, for example. These things take a long time to adjust.
Right.
It's really your daily spending money and maybe your hotel money. I think it's nice to feel that you're getting a good rate. So when you go overseas and you spend, you think that you're getting more bang for your buck.
Correct.
But I think when you tally it all up, I don't think it's going to make a huge material difference.
Okay, that's a fair point. Now, if we are planning to keep foreign currencies for possible trips, but then the situation changes, right? And we've seen this unfold in South Korea, for example, when there was that martial law. We're talking about protests in some countries, war, natural disasters, diplomatic changes even. What should we then do in order to avoid making a loss?
Sometimes it's, impossible to avoid losses in instances like that. So, for example, if you are planning a trip to a particular country and you've already converted that currency and something happens and you decide to cancel, which I know, some of my own friends did following the South Korean martial law that you mentioned. They decided to cancel the trip. And in that instance, you can either keep the currency, hoping that things will stabilize and you can, go back there again and utilize that, or you could, convert it to another currency, to another destination that you're planning to.
Okay.
That might incur some, loss, as you said, because that currency has dropped. But again, in the grand scheme of things, when we're talking about spending money for a holiday, it's not like you're going to incur massive losses. It's different from if you're trading or punting the currency markets with huge amounts of money. That's a
right.
totally different story.
That's left to the forex traders. We'll leave it to them. So 2 follow-up questions to that. I don't mean to trivialize war and conflict and protests in certain countries, but could this also then be an opportunity perhaps to maybe buy more of that currency because it's weakened as a result of what's happening in those countries? Or is that too dangerous?
I think it really depends on your intent. If you're planning to spend that on a trip, for example, then having that currency weaken just means your purchasing power is better and you're able to spend more. And in that instance, again, I caveat it, as long as you can afford it, then go for it. Why not? Because then you're able to, enjoy more, purchase more, enjoy, what is in store for you in that destination.
Let's say it's more of a planned event, say a presidential election. I mean, we saw that in the US, how President Trump returned to the White House, and that had an effect on the US dollar. So is that something that we should look out for as consumers, or when we're changing money, even if it's for a trip later down the road, the fact that these headline events will have an impact on currency?
These types of events certainly do have an impact on exchange rates. The problem is you're not quite sure which way it's going to affect it.
Correct.
You might think it will, strengthen the currency, for example, but in actuality, it might actually weaken it because there are other factors involved depending on whether the result was expected or not, and something else might happen. So yes, by all means, you can read the news, see what is coming up and have a view on how that might impact it, and you might want to act accordingly. But, again, even currency experts get it wrong, probably more often than they care to admit.
Yeah, that's a good
so
one.
for the average Joe, it's, almost impossible to accurately predict.
Yeah.
So I think the best is you have a clear idea of how much you want to spend. If the rate is something that you're happy with, then go for it. And like I always said, don't regret.
Yeah, don't regret. Make sure that it's at a comfortable point for you, right, before you make the decision. The other follow-up I had was you talked about holding on to that currency or converting it back to your home currency, and might incur some loss on our end. What about changing it to another kind of currency, maybe a weaker one or a stronger one? How does that work out? Does that make sense?
Yeah, so the beauty about in this day and age with multi-currency accounts, for example, is that the transaction costs are actually a lot lower now compared to the past. I mean, before we had these multi-currency accounts, you had to literally convert it in a money changer. The spreads typically are wider. And if you want to convert it back again, and then you have to again pay another spread. And I think part of the annoying thing is, as we all know, with money changers, they only take notes.
Yes.
Loose change, forget about it. You either make a donation at the airport or you try and spend it. But the beauty with multi-currency accounts is it doesn't really matter what the amount is, and you can convert it, and the rates tend to be pretty good. They're actually very close to wholesale rates.
Oh, wow.
So from that point of view, yes, you can convert it to another alternate currency or even convert it back to Sing. You're not going to necessarily incur huge transaction costs.
Okay.
And that's why it's been increasingly popular. I personally use it when I travel. It's fantastic.
I really enjoy the convenience of using a multi-currency app, especially in countries that do well on it. I wanted to get you to explain something that you mentioned earlier, and that's the spread. So when we convert it back to SGD, or if we choose to convert it to a different currency, talk to us about that spread. Can you explain to me in layman terms what that spread is, how it's calculated, and how much we actually have to end up paying?
Sure. So You think of a currency as a product. So, for example, the money changer, what is his trade? His business is basically buying and selling currency.
Right.
And they have to make money. They
Yes.
got to pay rent, they got to pay wages, they got to make a profit.
Right.
So that spread or the difference between the buy and sell rate is really the money changer's profit. For example, if you go to the counter and you convert and buy US dollars and you change your mind and you want to convert that amount of money back again,
Right.
you're going to incur a loss because of the spread, and that is the profit for the money changer.
Understood.
And this is how it applies for even the multi-currency accounts. There's going to be a small spread.
How small is small?
So it really depends on the currency. If you're talking about, say, a very liquid, popular currency like the US dollar.
Right.
So with Sing US, the spreads tend to be very, very narrow.
Okay.
But if it's a more obscure currency, for example,
Yeah.
then obviously the spread will be larger because there's not as much demand.
And
you
the
think about it
supply.
from the money changer's point of view, they have to hold the inventory.
Yes.
And it's costing them money to hold it.
That's
So
right.
therefore, they have to be compensated for that.
Okay, that's very clear. Thanks very much for that. Okay, so other than keeping foreign currencies for travel, I understand and know of some people who, I guess for the lack of a better term, hoard foreign currency as an investment tool, right? So, for example, there are people who are sending their kids to Australia to study in university, or they're looking and planning ahead. So, what they do is change some cash into Australian dollars, right? They keep that, and it's meant to be used at a later time when their kid finally ends up in university in Australia. Should such people be exchanging and keeping that money, even if it's for a long-term use? Are they losing out on changing too early? Again, the timing thing becomes a factor, right? What are some other things that they need to consider before they, convert that cash for later use?
In this particular example that you've used, I don't really term that as an investment because ultimately there is a final use that you're intending that foreign currency for. In this case, the children's education. This is really long-term planning.
Yeah.
So if you know that it's going to cost a certain amount in that foreign currency, then it makes sense if you think the rate is favorable now to start to convert some of it and keep it aside.
Okay.
It's more about trying to mitigate currency risks because, as we know, a typical degree could be 3 to 4 years. Currency fluctuations could be quite wide in that period of time.
That's right.
And if you're budgeting based on, say, a fixed amount of Singdollar, but depending on the currency fluctuations, it could actually end up quite substantially different. So if the rate is favorable, and then it makes perfect sense to maybe, like you say, park that aside. But the other important thing is, as long as you can also take advantage of it by, say, putting in a savings deposit rate in the foreign currency account, and at least earn some interest, and then at least the opportunity cost is lower.
Yeah, especially if you're thinking long term or at least over a period of time, right? There's some kind of runway that you're thinking
Correct.
about. You talked about how you wouldn't consider this an investment. So what constitutes a currency investment then?
So when it comes to investment, it's basically when you are converting or investing purely to make money out of it. So, in the earlier example we talked about, the use case was basically to pay for the child's education. So the investment is actually the child's education, not the actual, trading of foreign exchange.
Right.
Now, if you're doing it for purely investment, then all you're doing is you're taking a view on whether or not a particular currency is going to appreciate or depreciate, and then you transact accordingly.
Right.
But when it comes to FX, though, to really make significant enough of a return, typically it requires using margin. This is where a lot of FX traders do trade and take on margin. Now that's extremely dangerous, of course, because we're talking about leverage.
Yes.
And whilst the gains are magnified, so are the losses as well. So that's something to bear in mind whenever someone tries to think about undertaking FX as a trading investment.
Yeah, it's a very volatile environment as well, from what I understand. Now, we know currencies fluctuate. If I have a bunch of Japanese yen and it's starting to strengthen against the greenback, the US dollar, I'll be tempted to change that money again, right? Would you advise against doing so, or do you think this is fine?
Look, I think to me, it really depends on each individual person's situation.
Sure.
So if you're planning to go to Japan on a holiday and you are going to utilize that yen, then, why not just keep it? But on the other hand, if you're planning a trip to the US at some stage, then it makes sense to convert it to the US dollar because you're going to utilize that at some point.
So it's really down to utility. Then if I'm doing it on a multi-currency app, what should I be wary of? You talked about transaction fees being quite low, but are there other things that perhaps we may not be aware about when we're making these conversions on our multi-currency apps?
Well, I think for the multi-currency apps, the most important thing is how safe and reputable the the provider is. I think to me that's always very, very important. What we call counterparty risk, because it is basically a cash wallet, and if something were to happen to the organization, then you might lose that. Exactly right. But assuming you're very comfortable with the provider, then the other thing is things like fees, convenience, how many different multi-currency wallets that they offer. So those are some of the things that I normally look at.
Right, and then the kinds of currencies that are available as well on that wallet, right? And just finally, as a finishing touch here, and this is something that's always weighed on my mind whenever people talk about, this currency is dropped, time to buy more, and blah, blah, blah. What kind of amount do we convert for it to make a difference, for it to have meaning even?
I mean, to be honest with you...
It's a magic question, right?
Well, I mean, take for example, if you're going on a holiday, I don't know, typically you might maybe want to spend a few $100s or maybe $1,000 or $2,000 if it's a short haul trip. You just go down to the money changer. My favorite one is at the arcade near where I work.
Yeah, famous ones.
A lot of money changers, very competitive, and you can shop around. And it's interesting because even when I try and shop around and get the best rate, and I'm happy when I sort of think I can get a good bargain, but when I actually look at how much I saved, maybe it's enough for me to buy chai peng. That's about it. So in reality, but it makes me feel good, and I'm sure that's the psychology of it.
So you mean to say, if I wanted to change cash for my next trip, it wouldn't really matter which money changer I go to,
unless you're a really big spender and you're going to spend tens of thousands of dollars, then that might make a difference. But for a typical short trip, particularly if you're just going up to JB or something like that,
or anywhere within Asia,
correct, and that's not going to be that much, to be honest.
Okay, so obviously for a longer trip, maybe to Europe, somewhere that's a bit more expensive, that currency saving is going to matter a little bit. That was the clarity we needed, Khoon. Thank you so much for sitting in this hot seat.
Oh, welcome.
Hey, if you're listening, don't forget to bookmark this episode for your future travels. If you've got any comments or questions, feel free to send them through to us at the Money Talks podcast, and we will send it over to Khoon for answers. Money Talks is available on Apple Podcasts, Spotify, YouTube, and Me Listen. 5-star ratings are more than welcome, by the way. Credits to the team: Tiffany Ang, Junaini Johari, Joanne Chan, Marcus Ramos, Saye Wint, Shaza Delilia Rahmat. I'm Andrea Heng. Thank you for listening to the Money Talks podcast.